path to your first million starts with this. This is a promise I gave you. If you're gonna follow and watch the entire lesson today, you're not simply gonna have the same, simple day trading strategies about candlestick, but you'll learn the secrets behind them. I've been mentoring hundreds of traders, and everybody came to me, they told me, yeah, Jay, I know how to use candlesticks. But the point is that there are some secrets behind, really. And you can really comment to me over here below after if I was right about it. Because the way that I will teach you candlestick has really nothing like the videos you saw before. The best 3 setups, the best 3 candlestick patterns that you will find in the market, and it's really tangible, are 3. First one is the shooting star. It's a short bearish pattern. The reversal of this is going to be your hammer. Second, you will see the bearish engulfing, bearish pattern, and we'll cover that. Reversal is the bullish engulfing. And the third one, this is a little bit of surprise that I give you. This is my favorite candlestick pattern, so stay with all the video because I'm going to explain it to the end. First of all, we're going to look into why candlesticks are just simply like the universal language of trading. If you don't know candlesticks, you're going to miss so much. They're not, like the line charts or the bar charts. For example, before everybody was doing line charts, right? They give you a general vision of the long-term trend mainly. But instead, you have much more information with the candlestick, especially with the candlestick patterns. So when we align 2 or 3 more candles together, they form a pattern, they form a setup, especially these 4 reversals. So as we know, candlesticks, a little bit of history, they were founded or discovered by Munehisa Hamma, a Japanese right trader in the 18th century. But only after one of my mentors, Steve Nissen, in the 90s, and I studied by him in the Day Trading University in starting 2000, he started using more for the Western trading. I simply really got inspired by him and started using since early 2000 candlestick everywhere. Before I was using bar charts. The advantages, as I said before, candlestick, they will give you, okay, I have to enter over here because you will see so good the setups. But these setups, they won't work always. And then you will think, oh, Jay told me some BS over here. It doesn't really work, that hammer, that shooting star, that bullish engulfing. Because it's not simply trading the candlestick, it's when you trade it. There are 2 main things that you will learn today. How to use candlesticks and becoming profitable with candlesticks. First of all, we're gonna check what is the line chart. This is a line chart, and you can see traders that it's a daily chart. You don't know what is the open and the close and the high and the low of each daily or of each day, but you only see a general trend. There's also the volume down here. So each day has a different volume. For example, this day we had 5 million volume. This day over here we have 1.7 million volume, and so on. Now I change from a line chart to a candlestick chart. And now you will see the difference because you can see much more in detail what happens every single day. And what we can see, there are 2 major candles, bullish and bearish. Now you can see here which colors I did, right? So we can make, for example, the body green. I think is gonna be more simple for everybody. And then we can make the body, if it's bearish, red. Maybe just less, okay. But doesn't really matter, you can put all the colors you want. So the first bar is a bullish bar. So when the bar closes green, let's take this bar. This is the open. You can see that we have no dip or wick to the downside, right? So this is the open. Then we see a push to the upside. This is the high of the bar. This is the close of the bar. So bar opens, high, close, bullish candle. Then we have a bar that opens, high, fails all the way down, and it closes over here, red close or bearish candle. The wick is called shadow or wick. The green or red is called body of the candle. Two concepts over here. Each bar, it will tell you exactly what's happening during the day. But in order, for example, to know what happens during this day, as we know only that over here we open, we have the high, we have the low of the bar, and then it closes. We have to go on a shorter time frame. So I have to switch, for example, from a daily. The most common charts time frame will be the 5 minutes and then the 1 minute. So I went now to a 5-minute chart, and we see what? We see the open of the bar, the high, the low, and then at 4 o'clock, the close. So this is exactly what we see on that daily candle. This is all the pre-market. Remember that pre-market and after hours won't be present in your daily chart. We can simply do like this and go over here where it's written extended trading hours. We put regular trading hours, and that's essentially our daily chart. Okay, so we have over here our high of the bar, we have the low of the bar, we have the open of the bar, I'm talking about the daily bar, and then 4 o'clock, the close. If now I go to the daily chart, we can see just what we are talking about: the open, the high, the low, and the close. Why I use the pre-market and after hours? Because I also trade pre-market and after hours, and it gives me a little bit more information about the candle or about the price action. Now we're gonna look at some of the most important candlestick patterns. First, we're gonna talk about the doji. This bar that is just like a cross, right? Can be like this, can be like this, can be like this, okay? But essentially it's this bar. You can see there's almost, in this case, there's no body, but only wick. And what happens? This bar is called also indecision candle, because generally when we see a doji, okay, so remember D-O-J-I, and remember this is from Japanese, it means that we have a wick and it's indecision. So the price over here will often have lower volume versus the next bar. And I use it in combination with key levels to understand where we can have a reversal. In this case, what do we have over here? We have this formation, which is just like, we can put this. We have a downtrend. This is descending triangle, this formation. The bar that we're interested in is the doji. It actually breaks this trend line. It fails, it closes weak. So this becomes a little bit more advanced concept called bull trap. Essentially, what is the bull trap? It's a fake breakout. And once we have this fake breakout over here, it means that we have buyers who got long that now is a little bit stuck, right? And so what we will do, we'll simply short the close of this bar because it's inside now this descending triangle, and we want to take advantage of this unwind. That's our doji. Often doji will be present at a high or low of a trend. Here, another example of doji. So we see the price that failed one bar, second bar, third bar. Doji with a big over here selling pressure to the downside, because over here you can see that the price fails, right? Goes down. It's bought back up. So it means that we have actually buyers, and then it goes up 2 candles over here. So start looking at dojis only at key levels. Now we're going to talk about one of my favorite candlesticks, which is the shooting star. Imagine that we have a bar with a big long wick, and then we have over here a red close to the downside. Okay, so all of this is simply all red, and we have an uptrend. Price forms a shooting star, and then we have our downtrend. But often these won't simply work, right? And you will tell me, well, Jay, you told me to follow something that it doesn't really work. Well, now I'll show you how these can work more and have a better edge. So getting back to our shooting star, remember what I told you. We have a big wick. We have generally a red close, but we can even have, and it will be still a shooting star, a big wick with a green close. It's just important that this wick is generally 3 or 4 times the body. So if we look over here, the chart, often when we go up, we have a lot of shooting star. This bar, maybe we can see also this bar, and you can see they don't work. Because you cannot simply trade an uptrend stock and looking for that 5 minutes shooting star to take your short. But you have to look for that, what I call confluence. So you look first of all in multiple time frames, and you look also at key levels, so point of intersections. So 2 major things over here that you need in order to trade this, and this is the secret. So confluence of multiple time frames, MTF, and also remember point of intersection. Otherwise, your trade won't work. This is the only way I trade candlestick, to give me a high win rate. So let's take our example. The price over here finds a support. We have a cup breakout, higher low, we have another cup breakout, and the price gets to this previous high. So this is the main high of the morning where we have traded a lot of volume. So this level, 550, becomes a very important level. So the price is going up. While it's going up, I need to check my daily chart and see if we have any kind of resistance at 550. So the actual day that we're watching is this day over here. Let's see if before we have any kind of resistance or support at 550. So I can see traders, for example, that we have over here a peak at 5, right? But then over here, look how many times the price rejects and stalls into that area of 550. And then again over here, the price holds the 550. And this is a major support of 550 of one of the highest volume bars. So that level becomes a point of intersection. Why? Because more than one time, a key level is the low, relative high of a move. Relative low over here because then bounces. Relative low over here because then bounces. Relative low because it bounces. Relative high because it rejects. So today, price will actually go to 550, and I expect that 550 to be a very important level for my short. And you can see here exactly this concept. Intraday resistance already 550. Daily level, point of intersection 550. Price over here, what has is another fake breakout of a wedge or a pennant over here. We have this break. The bar form a shooting star with a green close. You can see that this wick is much bigger than the body. That low of the bar, of the shooting star, becomes my entry, and this becomes my stop. And then you have this lower high, lower lows, and the stock simply unwinds. I want to check also the confluence of multiple time frames. So we'll be checking over here an hourly chart, for example. Now let's check this together. This is the hourly chart that doesn't tell us really anything. So let's go to our 3 minutes. 3 minutes, we can see the concept instead of the fake breakout, right? Because we can see the break at this level, the push, close, the fail of that breakout level with a candle that closed weak, and then also a trend line break, and then the unwind. So the 3 minutes confirms it through a fake breakout, liquidity trap, and this is a little bit more advanced term, but remember, fake breakout, when breakouts don't simply work. And then the 1 minute chart that we can see again over here gives me a very good description, perspective of that trend line break and a fail. So why the candlestick over here is working? So why the candlesticks over here are working? We saw many shooting stars and they didn't work. But we saw then the shooting star with the key level, which is a major point of intersection, so that it was touched where we had a bounce or rejection on daily multiple times. That's the reason why it's called intersection. And the second reason is because there's also timing confirmation. So multiple time frames that are aligned together to give you that conviction and confidence. That is the big secret behind the candlesticks, why these work. Now I want to teach you about the second pattern that is going to be so effective in your trading. First one, we had the shooting star, and now we're going to have this one over here. There we go. So we have an uptrend on KITT. This is a small cap, but the same pattern will work for large cap, mid caps, and futures or forex. So you can simply put this into all the assets of trading. Price goes up, and we form a major high level. And then our lower high. And we can see that at a certain point, price reverses. So when it reverses at this point over here, what do we have over here? We have a bullish candle. So a candle that closes over here green. And then a bar that is actually wider than the bullish candle. So we'll put this like all black, saying this is bearish and this is bullish. So this goes up and this goes down with this wick and this wick. How is called this candlestick pattern? If this engulfs this bar and this is bearish, it's called bearish engulfing. And then you have your unwind. But we will see again many of these, and many won't work. And you will tell me, Jay, you told me only bullshit. Wait a second. First two things, confluence and point of intersection, or intersection and confluence. And let's dive together. So we're gonna put our line over here around 315. We can cancel these over here. Let's do all this work together. This is our chart on KITT. It's a beaten down stock. It's a stock that is downtrending. And now I'm simply putting my levels. This is where we have the gap. So I'm putting this support and this resistance, because this is called gap fill. Then I'm looking at the major relative high, this high, and then I'm looking at the major relative low, this low. And then, being that our day that we're looking at is a day, you can see over here, so the last day, the 9th, is this day over here, and the price is going up. I want to also look over here if we have other support resistance. Where is the highest volume of this period? This day over here, where we traded 5 million. So at the low and the high of that bar, high, we already have it, this is the low, I'm going to put another level of support. These are my levels. Now let's look for those major point of intersection. This is definitely one, price rejects, price rejects. This is definitely one, rejects, rejects, bounces, 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 almost rejects. So that, remember, 330 is very important. And this over here, this level 266 to 70, prices, bounces, bounces. This is the actual day, so we cannot really consider it, right? And then, of course, we could put the trend lines, EMAs, and so on, or moving averages. Now, let's go into the 5-minute chart. And remember that this major level over here is our main daily resistance. So when we have a resistance, remember, it's always a zone, something like this. So once the price gets into this area, we know that that is a major point of intersection where the price sometimes reject and sometimes instead bounced in the past. So it's a very important key level, that 330. This is our pattern that we're looking, is a bearish engulfing, so a bullish candle and bearish candle. We have to look for the second parameter, so the confluence. I'm checking this on a 3-minute chart, and what we have actually, another bearish engulfing on the 3 minutes. So we had on the 5 and on the 3, bullish candle, bearish candle. And it's already my setup. We have the key level of supply, and also we have 2 time frames confirming the bearish engulfing. I don't really need to see if there's another 1 minute. We can check or 50 minutes, just like this, but it's already that confluence. And what we have over here actually on the 1 minute, wow, another bearish engulfing. And look over here, the major signal, we have buy candle, sell candle, or buy bullish candle, bearish candle. And on this bar, the huge amount of selling. And that's the reason why using multiple time frames gives you that edge, because on this bar over here, you will see that we have selling pressure, so it gives you that confirmation. And you need to see this on different time frames. So this is the second main pattern, that it works through 2 main parameters, point of intersection and confluence. There we are, traders. That's my favorite candlestick pattern. I love it. I invite you really to come in the room and join us and see how many traders are having a high win rate with this pattern. I can tell you a few names, Ziggy. I can tell you also over here, Vin. I can tell you also over here, like Carl. They're trading this bar candlestick pattern with a very high win rate, and that's almost the entire trading, being that it worked for short and for long. And just look with me what it is. Ever heard about inside bars? I guess the majority of you will tell me yes. But how many times this bar means nothing to you? And what do we have? We have an inside bar over here. 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 So what is? Imagine that you have a previous bar and the next bar is an inside bar. Means that this bar is totally engulfed inside the previous bar. So it's a mini bar. The secret is the smaller this bar, the better. Okay, Jay, you give me the truth, right? And you can tell me now, Jay, if this works so much, why you don't trade only that? And why you didn't make millions from that? Who told you not? We actually trading this every single day, and as some student making last month, big 5 figures on this pattern. But it's not that the inside bar alone will work. You have to put inside bar with 2 concepts. Remember, point of intersection and also confluence. Now you became familiar with this, and I'll show you some examples. So we are day traders and we work momentum. So you want to see this pattern with some kind of volume. High volume determines really the move. And now we're gonna simply put an arrow to the inside bar. So this bar over here, this bar over here. Maybe I'm missing some, okay? I'm just taking a few of them. Think also this bar over here. And also this bar over here. So when they will work, Jay? First thing, we have to find the key levels. Daily chart, and then hourly chart. When you're trading large cap, a little bit of secret, hourly chart. This is my chart to go. And then we are in a range because this is the actual day we're watching. I want to take a range from here down till here. And we're going to trace fibs in this way. This is my way. So it's not the orthodox way. Put the high, 100, put over here the 0, and then you have the retracements, fibs. So we have the 78, 61, 50, 38, 23, and 0. Trace them, and then we go to the 5 minutes. And now we can say that we have a inside bar at the key daily level. We have another inside bar at the fib. We have over here another inside bar far from everything. We have an inside bar at the fib, another inside bar near the fib. Over here, this is another inside bar at the fib. And we can put another level over here. So the first thing is to look at inside bars at key levels, point of intersection. The second thing is the confluence of time frames and also this. What is this? These are my J lines. Check the previous video, link is here, because that will give you the confluence and confirmation. As we said, this blue candle, this blue wave or blue cloud is our J lines 1, together with the red line, which is a Fibonacci. Bullshit. This is what we said, and check the video again. This is the blue wave or blue cloud, which is the J lines 1, together with the red line VWAP. So we have over here again a confluence. We have in this case a moving average, 729, and it's getting that from a Fibonacci expansion number, the 89, together with a VWAP, and now together with a fib level, and now together with what? With the inside bar. What is this thing? It's confluence. In this case, we don't really need to see confluence of different time frames. We have confluence of signals, VWAP, J lines, Fibonacci level, inside bar. That is a money maker for me. Of course, there's a little bit more concept behind. That's the reason why you really want to make money. Join the room, get in, and look for certain weeks. And that's the reason why I invite you stay with us in the room, because we're training all this together like a family. I'm calling these, I'm showing these, and you will see all the traders getting in. They're showing their charts, so we're doing this together. So that is my trade. Exactly on the break of the inside bar. Often I will enter before that break if I see already volume, and I'm putting my stop below, and that boom, is my big trend. I'm not taking this. Far from the JLines could work, but in this case, I'm looking for the basic setups. And then over here, I have a setup that doesn't work. Inside bar, I enter long over here. This is my stop. And after the J slim, that's another reversal. I'm getting out, scratch. Over here, we have what? VWAP, inside bar, I'm longing. Pivot, or Fibonacci. Inside bar, JLines, and cup pattern. Wow. Volume increase, all gray means all green to go. Longing, loading that size. And I can show you traders, because we have a trading guide, almost 250 examples in the last 6 months, actually now 8 months of trading, large cap and small caps, about this inside bar, JLine Curl volume with the confluence of VWAP, JLines level that work. This setup with the proper parameters work more than 70% of the time, okay? And this is how I trade the inside bar. Let's see some more examples. Another example here. In this case, we have Billy, large cap, 1 minute chart. This is a key level. Again, a fib retracement. This is our inside bar. This is our JLines. We have a cup pattern. On this break of the cup pattern, you can see the increase of volume. That's my long play. That's my risk. Boom, to the upside. Of course, you need to see the day catalyst and volume. Futu, large cap. As I said, works for future, for small caps. Inside bar, at the JLines VWAP, increase of volume. Also over here, what we have a fib level, cup pattern, long play exactly here, risk to the upside. And boom, another trade. This was crazy good. JLines is the green over here. Price goes up, this was POL, and it came over here around 350s. Inside bar, 350, I have the number. We had the volume increase, long here, stop below. And this was such a move. It went almost 200% from that. Of course, not every day you'll see these moves, but when they happen, volume, confluence, intersection. That's the way to go. Remember, traders, that in order to become profitable, it's not just simply watching a video can really change you. You have to trade these over and over, track them, do retrading, and practice them. And that's the reason why we do this every single day for months, and traders are becoming skilled. And only through the mentoring program, you will have these results, because you will simply not take 2, 3, 4 years to becoming successful, but in a couple of months, 5, 6 months, you will really gain that experience, profitability, that otherwise alone you will take like 4, 5, 6 times more. So that's the reason why I invite you to join me for the mentoring. Check the link below if you want more info. And also, if you have other questions about how to use these setups, which pattern you can work with, and also you can join me for the pre-market streamings. Again, this is Jay. Good luck for your trading, and reach out if you need.